Good morning, GM, everyone, and welcome to another episode of FOMO HOUR. Today is Friday, April 25th, 2025, and it's another green morning out there, folks. GM&D crypto majors, alts, beams, all rallying. Even the crypto AI board is pumping, and the question is, can this continue? We're going to break it all down on today's show. No Farokh, but we've got a full house. We got Mando, Stats, Jeeves, all in the studio. You love to see it. Boys, GM, Mando, how you doing?
I'm doing great, man. I'm doing great. Summer's here.
Indeed, the sun is shining. Even in Chicago, the sun is shining. We haven't had it for months, but we have it now. Stats, Sam, GM, how are you doing?
GM, how's life?
Good. Even better now. I get to talk to you.
I'm doing, yeah. You know, like I said, I haven't had a coffee yet, so my personality will change as the show goes on.
Well, we're excited to track that and your caffeine levels in real time during the show. And folks, we've got Jeeves on with us here this morning as well. Jeeves, GM, how you doing?
GM, ready to be that coffee for Sam. Wake him up here.
Let's go, baby.
Well, I don't have coffee, but what I do have is a shiny new can of Rect here, folks.
I've got the old one here. Is it better? You said it was better. I haven't actually tasted it, but Ovi says this one's way better. So
I gave a review on X yesterday to those who
Very positive.
Seen it. That was not a paid review by any means. That was an honest and genuine review. This is better.
I haven't tasted
it. Is it just sparkling water? Or is it just sparkling flavored water?
It is flavored sparkling water. Very, very clean list of ingredients. I'm going to read them off. Carbonated water, organic agave syrup, natural apple flavor, natural raspberry flavor, natural flavors, and then malic acid. So pretty clean ingredient list. It is more carbonated than the lime.
Interesting.
And I like the
How do you
flavor.
get them?
How'd you get them? I think Ovi must have sent you them. I haven't even got any, so I don't know what you did for the first round, but you got them before I did. I still haven't tasted it. So he's doing this like abstract tour at the moment. He's on like 20 different shows over the last 2 days. So Tyler, you tell me how you got them. Like, did you?
I've got the inside track.
Yeah, clearly
With OV, but I believe they will open up for a public sale soon. I think there's some news to come. So I don't know exactly when that's going to be. I do think it is going to be soon. And I think these are going to move quickly. That's my prediction, at least as soon as people get a chance to taste these, because they are quite good. Folks, what are we talking about on this morning show? We're going to talk about more than coffee and rec drinks, even though I could probably do a full hour on this. We're going to talk about the crypto market rallying. Is it decoupling? The Bitcoin ETFs, $2.8 billion in inflows in 5 days. Sol outperforming in majors. SUI outperforming in alts. The Fed rescinding its crypto guidance. MetaMask launching gasless trading. Coinbase listing Zora. Market didn't care. Memes pumping. Crypto AI pumping. Deloitte eyeing $4.5 trillion in tokenized real estate. I know Jeeves' eyes lit up when he saw that RWA headline. Plus double yeet spins. Before we dive in, a quick shout out to our partner, Wallet Connect. Wallet Connect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen Wallet Connect. That blue logo, it's everywhere. An icon of trust in crypto, as recognizable as Visa at the checkout. If you want to learn more, follow at Wallet Connect on X and Telegram to stay ahead of what's next. All right, we love our partners as always. Mando, if you're ready, let's get into it.
Who is the man, macro daddy of the land? Can you dig it?
good day. Another good day, really, in crypto. I think everyone keeps waiting for the day that we kind of sell off. And there just seems to be support around this like 92.5 or 92K level for Bitcoin at the moment. And these green candles continue. I think it's just something to always be wary about with crypto is that like the good periods often, and actually sometimes the bad periods happen quickly. You know, risk happens quickly in crypto. And right now, I think if you weren't exposed to the market, you are probably in, I'll buy the next dip. And these dips are quite shallow. It feels like, so it probably just indicates that people were less invested than I thought they were. And yeah, good period here. Bitcoin dominance is still kind of hanging out at 64.5. That's mainly because of ETH is still underperforming, but there's been some winners in L1s for sure. SUI has probably been the main winner. And then a lot of the more risky activity on Solana's come back. So most of the major Solana memes are up a decent amount, and some of the AI coins. The AI coins are back up to 8 billion as a group now on Cookie, which I thought was relatively interesting. Farokh has not been doing as well, which I thought was again interesting. It's now gone a bit more broad, and there's a few other things involved in that rally. I think the main story, at least for TradFi this week, continues to be this Cantor vehicle alongside Tether. I just think that the idea that we may have like another micro strategy, and you've seen a very good reaction to Cantor stock on the back of that, is just a good sign. And I think people are thinking that, this is going to continue here as other vehicles may be spun up, whether it's sovereign wealth funds or actually public vehicles, then to buy Bitcoin here. So that's why I think the dips are shallow. And I think people also were probably less invested than they were a few months ago. So there's a little bit of FOMO creeping in. I don't know if now's like some incredible time to buy, but I do think it's I would be unsurprised if like there's this grind higher, which doesn't feel that good for a lot of the market participants. That's kind of my guess. Yeah, I don't really know why SUI outperformance has been kind of strange. All I can really see is this Pokemon thing, because there's not like a ton that ever really goes on SUI, if I'm honest. It's a lot of like B2B stuff rather than huge amounts of DeFi or anything like that, or huge amounts of NFTs. There's some stuff going on, but it's nowhere near like some of the other chains. So maybe we're going to hear some more headlines specific to SUI coming on. The move feels like it feels almost parabolic at this stage, right? 75% in 7 days for an L1. That's pretty aggressive.
It's big. I mean, 37 billion FTB.
Yeah, right.
So his
what do you do on SUI?
Does it seem like a catch-up trade, Mando? People trying to chase what would maybe be next cycle Solana, since it has a bit of like narrative and mind share?
That's what it always has been with SUI, I feel like. I just don't know why at times it feels like, this is... I don't know. Like if I look at... I don't know how much stables... Like, what is SUI TVL? Like, SUI TVL is only 1.5 billion or 1.7 or 8 billion. Like, that's not crazy as chains go. Yeah, like Arbitrum has 2.5. It's kind of just above AVAX, really, right? Sonic's even close to it. I don't know. It just seems like it has this like momentum behind it, and I get the feeling there's going to be some headlines around SUI that maybe we haven't heard about. Like those numbers don't point to like, oh my god, this is about to go crazy, right?
Have you guys used SUI? Like, is this a platform you guys spend time on?
I haven't. I don't think it's very B2C. Like, there's not that much activity that goes on. There's been a lot of like corporate integrations that I've seen, but less like NFTs, meme coins. I don't even know if people use it for payments that often.
Yeah,
I think that's the right. I mean, I have used it. I've traded some NFTs on SUI. I've traded a handful of tokens, but I do think Mando's read is the right one. I mean, daily active addresses they do seem to be grinding up here. I mean, they're up 3x this year. You always have to be careful with that metric, right? When making the games.
Maybe I'm missing what people are doing on there. Like I look at where the TVL is. It's this SUI lend protocol, so they clearly have a lending protocol on there.
So pop over to search for SUI. Go to application activity. It's the next one on that ribbon, and then click View All Assets, which is in the second window down. You see that? Yeah, and then filter by daily active addresses. Sort that from at least. I think it's already sorted actually by that.
Yeah, record. What's record?
I've never heard of any of these things. 818,000 people using some app, 116,000 using Fan TV. I've never heard of any of this. Like,
Do you see the SUI is my biggest alt bag, and I've never used the chain, and I know nothing about it.
I think that's what's driving a lot of the price, to be honest.
Yeah.
Maybe we should pay attention to Record. It's got 1 million active daily addresses.
I just typed in record and SUI, and nothing's come up.
Nothing comes up on Google either.
Yeah, that's what I mean. What's going on here, guys? What are we missing? Record app. It allows creators to monetize via short videos. Based in Dubai.
Content.
Maybe I missed this. Like,
Based in Dubai, that's a signal.
I mean, the last post was a week ago, so. Then before that,
it felt like it was more than just like the Pokemon headline. I didn't think the Pokemon headline was enough to pump it 50% this week, but I feel like from a narrative perspective, I feel like Jeeves kind of has it. Like it feels like it's if you want to bet on alt L1 further out the risk curve than Solana, like what are you going to bet on? And hype perhaps is the most consensus. SUI kind of next, been a little bit more quiet. So maybe that's it. I want to zoom out a little bit. Mando, thanks for the broader report, and go around the horn. Maybe Sam, I'm curious as for your thoughts on macro here. I think you shared a couple tweets this week. I was scrolling through one. You kind of called out consumer sentiment at multi-year lows, and you're kind of showing how crypto sentiment feels different than that, perhaps more 50-50. Which I'd argue maybe it's even higher than that, to be honest. But maybe we have to separate Bitcoin from crypto. But just kind of maybe curious for your thoughts to kind of elaborate on this and how are you feeling about this?
All that you can. Am I losing you guys? I'm not sure if my reception is kind of getting weird or if that's everybody.
You're fine now.
Yeah. I mean, I think the macro indicators are pretty bad. I think the impact, like I'm kind of the view that we've been in like a 70-year bull market basically because of globalization. Certainly the past 30 years, like bull market for big corporates. And that is kind of what we're chipping away at right now. And that's really been the core of a huge, not just enormous earnings growth, but also huge multiple expansion for stocks. If you look at things like the dollar, like they're sending pretty bad signals. I think pretty much every sentiment indicator you're seeing is pretty bad right now. And I think that these tariffs and kind of this commitment to kind of chip away at globalization is real, and it's going to be going on for a while. And I think there's a bit of a sentiment among markets that just one tweet from Donald Trump and it's all going to be over. And I just don't get that read from when I hear him. So from a macro perspective and an equity perspective, I think there's reason to be cautious. I think what we're seeing in crypto, though, is the opposite. Like we're seeing crypto starting to show signs of behaving. I mean, if you look at metals and equities, they almost like gold is obviously the core metal, but more often than not, they're trading in opposite directions where gold goes up and equity goes down or vice versa. And we're starting to see crypto kind of behave a bit more like gold. And you're starting to see the use case or the idea that crypto is an interesting place to be if the world order starts to get chipped away at. Like that thesis has never played out before. But over the past few weeks, you're starting to see signs of it. So, that's kind of my broad picture view is, a bit more cautious on equities and risk assets, but a bit more like kind of 50-50, like maybe crypto starts turning here and becoming something that people want to be in a world where the things that we're used to and the things that have driven kind of economic growth forever start to get chipped away at.
It's interesting. I feel like I agree with that directional read. I'm curious, like what has shifted in this? Like, what's driving this Bitcoin decoupling right now? I guess it's kind of like my question. And why is it happening in the last 7 days?
I mean, it's hard to say 7 days versus like a month ago or whatever, but
it's also very hard. Right? It's definitely been going on versus stocks. It's been definitely been going on for a while, right? I think we started decoupling about 6 weeks ago. from
maybe 6 weeks.
Yeah.
From like the election until like February, though, like Bitcoin was correlated with Tesla more than it was correlated with gold. Like they were both kind of like high beta proxies for assets that the administration viewed favorably. And like that was like, but like Tesla and Bitcoin were more correlated than Bitcoin and gold were up until about 6 weeks ago. But I think just gold has been insane. You know, like this has been like a multi standard deviation move for gold. It's not. People don't have gold going up 35% like over 6 months kind of on their bingo card. And when that happens, I think people want to know what else they can get into. And I think really ever since the tariffs, gold has been the keynote asset. And I think once, we see it in crypto, like it used to be at least that when Bitcoin would run, then like everything else would kind of follow. I feel like right now people are like, well, I don't want to get into gold. It feels it's run too much. Oh, Bitcoin could be like an alternative as far as like kind of like one of these inflation hedge assets, even though it hasn't been that historically. It just feels like that narrative's coming around. Plus, we have an administration that really likes it. You have Lutnick, who is working on this. Cantor is working on this product, and the head of Cantor is in the administration. And then you have Saylor in the background, who's kind of like a constant buy force. As well as all the other things I have absolutely no idea about that drive these markets that we're completely oblivious to. But it feels like there are a lot of different forces kind of lining up. But as people say, like, hey, we want to get out of US dollars as our kind of backbone of our portfolio, like Bitcoin just feels like an area that people might want to turn to.
Yeah.
And that 6 weeks is basically since Liberation Day. I mean, it's really Liberation Day, I think, that triggered this, because that was when we made it clear that gold, that the U.S. had an interest in playing a different role in the world economy than we have in the past.
And Bitcoin was 75K on 17 days ago.
Yeah, it's been pretty sudden. I don't know what the trigger was that switched us from fear to FOMO. I'm not sure what that trigger was. I mean, other than perhaps maybe that was when gold really started hitting these like crazy all-time highs every day and doing like 3% moves, which it never used to do.
It is interesting if I feel like there is growing sentiment that stocks, like while we might get like relief rallies, that the broader direction is still down, and that the pain of the tariffs hasn't even really been seen yet. And if stocks become less investable, but you still want to invest, like what are the options? I think you kind of laid it out. And gold's on a parabolic move. Do you want to buy the top, or do you want to buy something else? Real quick, folks, today's raffle block code is Friday, and we are going to be doing those Yeet giveaways here in probably just about 10 to 15 minutes. So they are coming up. Jeebs, I want to give you a chance to weigh in. And we talk every Tuesday about that. So curious if you have your thoughts in the conversation here.
Yeah, I mean, just a lot, Tyler. This move and interest in Bitcoin, I think it makes sense. It's something that we've talked about for a long time. When Bitcoin was 75K, it looked less like digital gold. At closer to 95, it's looking a lot more like digital gold. And I think that narrative just compiles. Last night at this event, I was talking with a guy who's a wealth manager for high net worths. He's now putting 2% allocation into Bitcoin for all of his clients. And I think that's where it starts. This is one of the things that we had spoken about earlier, where folks are, and ideally advisors start to recommend to their clients to have some level of Bitcoin allocation. But I think when you see these huge signals like Cantor going after the Bitcoin space, like taking over the MicroStrategy or replicating MicroStrategy, when you start to see the government moving in a very pro crypto direction with, the two stable bills that are happening with the market structure bill, and the government's clearly aligning toward crypto, it makes it less of a scary asset to invest in times like this. And when you start to see the price go up, I think sentiment changes. I love seeing sort of the hard data, and then I love like the sentiment checks with neighbors, people in different industries, just to see how things are going. And so, we talk about this privately, but just know a lot of folks who are changing up general spending behavior. Our neighbor stopped over yesterday. She's a realtor. Covers the Denver market, has been in it for a long time. And she said things have now cooled off significantly. So we cooled off for a little while. I think things started to heat up slightly again. And she said it is completely dead. And no one's moving, no one's selling, no one's buying. Obviously rates are a huge part here. But the reality is that people and companies are having difficulty making any type of long-term decisions, not knowing where things are heading. And so stability in the world and markets is just being disrupted a bit. And so for now, the best decision for most people has become no decision. And then this right here, I think this is some really great data coming out of trucking activity in Los Angeles. The data source here is Sonar, which is a data and logistics company focused on shipping, trucking, etc. And this is showing that things are kind of falling off a cliff coming out of trucking in LA. And this guy, Craig Fuller, is anticipating a 50% drop here. So we're talking major reduction in trucking coming out of LA, which is where a lot of our Asian goods come into ports. So we're seeing it in the data.
We are. Thanks for sharing this. And I was trying to find a friend of mine runs an e-commerce business. He sells e-bikes, and he posted his thoughts yesterday and basically said most small e-com businesses are just in survive mode. And that might mean selling existing inventory till it's gone and not repurchasing anything until there's more clarity on supply chains and where they can source products from. And he is kind of comparing it to the COVID level crisis, just bunker down and try to make it through. And he paints a gloomy picture as well. And like this is going to start to impact folks, impact products, less on shelves, higher prices, all that. So that picture is gloomy. I think Sam, you also shared Bat Soup's thoughts, which are pretty in line. He's saying recession at best, stagflation at worst. Basically, U.S. has put themselves in a tough position here.
One of the interesting things talking to Bat Soup is like, I think there's this view that the money printer is going to turn on and that's going to save everyone. I think people are really imprinting this COVID economic cycle onto this cycle when COVID was such a unique outlier that to think like that's going to be replicated, I think, it feels uncertain to me for sure. But Bat Soup's kind of the view that lower rates might be bad for markets. That right now that right now, broadly speaking, like people think like long-term inflation is going to be higher, and that lower rates aren't really the key or the solution. And one of the interesting things was the day that it was announced, or the day it was never announced, but the day it was suggested by Walter Bloomberg and Watcher Guru that Trump wasn't going to fire Powell, and he said that too. Like the day that he said, like, I'm not going to fire Powell, markets ripped. Now him firing Powell would be dovish. Like the reason he doesn't like Powell is because Powell wants to keep rates high. Or doesn't want to keep rates high, but he's not willing to just go full money printer, rates to zero. So you would think that him saying he's not going to fire him would mean that we're going to be more hawkish. But on that day, basically when he said we're going to be tighter, like the market's completely ripped, which to me says that it's actually not money printing that people are looking for, it's stability. Because Powell is a sign of stability. He's not a sign of free money. And the idea that he was sticking around, you saw a 3% rally in NASDAQ. So I thought that was kind of interesting because if you look at the timeline, I feel like just crypto, we're all still so like wedded to, sitting around our houses in COVID, during COVID, watching everything go up 8% per day. And we want that to return. So, we're thinking, okay, we're just going to replicate that, but with a new cycle. I just don't think that's kind of the situation we're in right now.
I tend to agree. I feel like printing money right now, it goes against everything that Trump has said that they're trying to do, investment, right? They're trying to reduce the debt.
Yeah.
How is
printing? Do you know who is printing right now?
China,
big time, and a bunch of other countries as well. Like the U.S. is posturing that we're at the table with China, while China is just publicly saying there's no negotiation talks happening, which is a huge, huge divergence in, I think, just people puffing their chest in different areas. But like, it's clear China's ready to duke this out. Like, I think just this morning they injected, was it 600 billion yuan, which is like $82 billion, aiming to provide, they want to make sure that the banking sector has plenty of liquidity to wait this out. And they're ready to print and ensure that a lot of their folks are in decent positioning over the next, call it 6 months, a year, however long they want to fight this out. It's concerning, I think.
The narrative that I'm seeing out of this, China is printing, buying gold, selling US dollars, perhaps buying digital gold. I haven't seen as much of that, but it would certainly be in line, or perhaps that enables more confidence from these sovereign wealth funds, from these institutions, from these new strategy competitors, which are spinning up to start building these crypto treasuries. Jeeves, I'm curious, kind of maybe going one step further. I wanted to talk trends. I think we've talked this macro picture, 20 minutes now. I feel like there's some things shifting in the crypto space. I feel like we're seeing some new things start to happen, some new trends. I'm curious what jumps out to you.
Man, I feel like right now it's just such a heavy liquidity fight. But obviously the RWA space that we've talked about quite a bit has been one of the massive emerging trends. If you look at a company like Figure, who's putting billions of dollars in HELOCs on chain. You have Deloitte writing an entire thesis on this. We're coming off the backs of the Digital Asset Summit, where all the major players were really pushing this whole concept of RWAs, right? RWAs are not new. They've been around since I've been in crypto, and that was around 2014, 15, when people were talking about putting your home on chain and your car on chain and everything will be on chain. And it really never materialized. I think the first wave of RWAs were these small to medium business loans from like Maple, Centrifuge, some of the other players. And then you sort of saw that die out. It's kind of living around a bit. Goldfinch was in there as well. But then they started to see default risk. There's a bunch of problems with that. And now what you're seeing is a lot of private credit come on chain. And that's the new darling child in the RWA space. And so what does that mean? You see folks like Apollo, you see KKR, they run these giant private credit books, whether it be private credit, debt, infrastructure. There's tons of different instruments that they do. And a lot of folks are thinking, okay, RWAs are coming on chain. They're going to put these different strategies on chain, but degens aren't going to be the customers of these different assets. And I think that's where folks get confused with them, because folks are like, this will never work. Degens won't buy it. That's not exactly what it will look like. So when you think of how this works, there's the capital formation component, there's the actual underlying asset that capital flows into, and then there's capital distribution, right? This strategy made some money. We need to pay out our investors. The tail ends are where we're going to see crypto used the most upfront, because now you can basically set up either sort of via automated via smart contracts or ease of capital formation on chain, but then just utilizing stable coins, you're now reducing your fees for capital formation and capital distribution by 100 plus bips. And when you're doing tons of these deals, that matters over time. So I think folks are now realizing we can use really blockchain rails and stable coins to create huge efficiencies in our operations. And look, Apollo's large investment into Plume is a huge signal to that thesis. So this is one of the areas, as you know, we talk about this almost every Tuesday. It's one of the areas that on the early stage venture side, I look for companies that are building and doing this, and probably talk to 3 to 5 a week building in this space. And I think it's one of the hot areas. The problem I'll point out here, from the retail side and the investor side, it's where will appreciation from the investor standpoint fall? Will it be at the protocols issuing the private credit, private debt? Will it be at the specific blockchains that are actually, coordinating all these efforts? Or will it end up being the public companies like your KKRs and your Apollos, who are now gaining the huge efficiencies by issuing these products on chain and saving a bunch of money that way? So I know that's a lot, but that's kind of where my head's at with this space.
It is a lot, but I think this is clearly one of the biggest macro trends happening in crypto. It's going to take time to play out, but we're seeing more evidence of it on a weekly basis. So we'll stay close to it. We won't have time to get into it today, but on Tuesday's show, save your thoughts. We got to talk about Coinbase trying to stop the Genius Act stablecoin bill, and if we think that's going to be a positive or negative. So that was a bit of a surprise. We haven't talked about it on this show. TLDR, they think they're only going to be able to get one crypto bill through Congress this year, and they want a broader bill than this current act. So we'll see if they're able to make that happen. Another trend I want to talk about quickly, and Sam, maybe I'll throw this one to you, is out of MetaMask. And this broader trend of abstraction and abstracting away different aspects of the user experience on chain. So the news out of MetaMask yesterday, they announced this a while ago. It's officially real now. You don't need ETH to do transactions using MetaMask on Ethereum now. They will use what tokens you have and they will make it your gas token effectively. Behind the scenes, as I understand it, they'll be converting it to ETH for gas. And they're also enabling you to choose whatever default gas token you want. So if you want to always operate on USDC on Ethereum, now you can do that. I think one of the immediate questions that comes to mind when people sees this is, what does that mean for Ethereum, for ETH? Curious if you have a take on this.
All right, I have a couple takes here. First of all, this problem is one that I dealt with today. And doing transactions on Polygon, where you got to get money over there, you got to figure out how to get the Matic to pay the gas. You got to figure out, it is extremely difficult. Yes. I've had a lot of times where I'm pinging friends to be like, hey, can you send me $6 of whatever into this address so that I can buy this NFT or whatever? It's a really clunky, awkward user experience. And I'm old and I'm not the perfect demographic for doing this stuff, but I'm pretty high up there. I work full-time in crypto. I'm pretty high up there should be able to figure this stuff out. Mm-hmm. And even for me, it's incredibly difficult. So the challenge of getting in today, I had money on base and I just wanted to put it into some stable stuff.
Do we lose him?
Sam, we lost you. Dang. You're really getting
wall to wall. Yeah.
Keep cooking.
So this is a serious problem to fix. So I personally think this is great. Obviously, it has to be done well. You don't want to end up realizing you paid some absurd rate to move your Pengu to pay for your gas in Arbitrum or something like that. So if I got to it feels like there's potential bugs in here where you could be but if assuming that it's done well, this feels very useful. What does this mean for ETH prices? Probably nothing. I don't think this is a driver for ETH prices, but I think it's a nice to have usability factor.
What is a driver for ETH prices?
FOMO, man. I mean, it's a meme coin. Maybe people are going to hate me. I mean, it's very hard to back into hundreds of billions of dollar valuation for something like any of this. None of this stuff really does the cash flow generate back what it is. They're all culture coins and vibe coins and FOMO coins and and I think with ETH, we had this really great narrative that Bitcoin was going to rally because of the Trump administration. It did. ETH was the next one to go because it was the only other one with an ETF. And that was so Bitcoin would rally, then ETH would rally because that was what American retail had access to and easy access to. And that thesis just, maybe it played out for a little while, but it's not showing legs. And I think people are struggling to figure out what the next thesis is. Because at the end of the day, hundreds of billions of dollars, I think it's very hard to back into a fundamental backing for that. So it's very vibe based, and when vibes go down, it becomes harder. I will say this: every night I do a once a week chess lesson with a guy in Ukraine, and I pay him 35 USDC for the hour chess lesson, and he pings me and said, "Hey, I moved it all to ETH." So as my one bullish, he's like, yeah, exactly. He's like, I took the lesson, $35 of ETH buying. So maybe Ukraine or he lives in Slovakia. Maybe Slovakian retail is the one indicator. But yeah, I think the story for ETH is often next best story after Bitcoin in the FOMO world, because FOMO is which has all this stuff, and that just hasn't been playing out. So people are like, all right, what's next?
Jeeves, I was going to ask you. So you're the wealth manager you're talking to. Is he just 2% Bitcoin and no exposure to anything else?
Just Bitcoin. He thinks it's a nice gold hedge. He thinks he said last night that he was more bullish Bitcoin than gold long term. And I love that. One thing, Sam, to your point, I pointed this data out to Tyler earlier this week. Artemis, Mando, I saw you using it before. Love this platform. When you start to look at going back to just it's narrative focused, Artemis has this great thing when you look at projects, you can sort the market cap by revenue. So they create a ratio on this. And man, one of the top ones here, trading at a 49,000x Ripple.
Yeah.
I mean, Ethereum is
Crazy.
trading at 2300x. SUI's at 2500x.
I mean, this is the, take it or leave it. I don't know how accurate this data is, but I think it's interesting when you come here and look at these multiples. It's just one piece of data in a much larger picture, but man, 49,000x, that's.
But where does Bitcoin trade? I think XRP is just a Bitcoin now. Like, people who own it, do they even care if it has a use case? Like, I think in 20 years, if Ripple doesn't have a use case, I don't think the people who own Ripple will care. It's like this Bitcoin community of just like, this is our currency, XRP army. I think Ripple's in a great little spot there because it's got that and not many others do. Like ETH, I know it sounds ridiculous, but everyone in ETH is a professor who is like, oh, we were trying to build this. It's all about the revenue and the revenue's gone wrong. You need more left curve. This is going to 500 trillion people in your community. And ETH doesn't have that. It doesn't have any meme value. It's not seen as a currency. It's seen as a PE multiple. And that's where ETH has gone wrong.
It was the same thing with NFTs. The minute people start trying to build fundamental valuations, you're fucked because these numbers are just way too high. Like, it was like Clone X. A Clone X cost $80,000 and they're sending people shoes. Let's just say they were free. They weren't free, but let's just say they were free. No pair of shoes is going to ever justify an $80,000 PFP. It has to be about the vibes, the FOMO, and the narrative. That said, I mean, the interesting thing is ETH is the only actual real currency that ever existed in crypto, because I think of CryptoPunks and Bored Apes in terms of their ETH prices. It's like the only time where crypto actually broke through and people started to really, in their brain, fully calibrate an asset in terms of their cryptocurrency prices, as opposed to like, I couldn't tell you how many Bitcoin I bought my house for. I can only tell you how many US dollars I bought my house for, but I know exactly how many ETH I bought each of my CryptoPunks for. So it's interesting that's actually kind of broken through in the one way we all want these things to do, which is that assets actually people start to see the world in terms of those assets. I don't think anything's ever done that other than ETH. But again, when you're dealing with a multi-$100 billion valuation, like it's just not there. I disagree. I think the meme value and like not the meme's the wrong word, but like the cultural value, the cultural appreciation, I don't think it's like a dead horse. I think it could have another gallop. It's very hard to predict the winds of culture.
One last really quick Ripple thought on this one. So going back to the soft data, whenever I'm in the sauna, people are generally talking crypto and other stuff. Ripple comes up more than any other currency. And I always just naively ask people like, what does it do? Like, what's the purpose? What do you use it for? And confidently, every single person answers it the same way. It's replacing Swift.
100%. I have a guy on my hockey team, my hygienist, my kid's tennis coach, and now the chess instructor. Those are my 4 examples. All 4, two of them are all in on Ripple. And they say it's replacing Swift. Like, this narrative's 8 years old. It hasn't evolved at all, but that's still what they're doing.
That's what I'm saying.
All 4 of them, all 4 say Bitcoin is too expensive for them to buy.
I think that's the key. It's like in 20 years, they'll say the same thing. It's going to replace Swift. Like, there's
it's better for them not to make progress on this front, and then that can just continue to be the narrative, folks.
And I hate to say it, I'm going to say the most anti-crypto thing ever. We are not early. This narrative has been around for 10 years. If this were real, we would see progress. Like, this is not like a lot of these techs. Like, YouTube and crypto are the same age. YouTube feels like a dinosaur product. Like, people are YouTube, it's like not even where the cool content creators are going. Like, a lot of this stuff is not early, but Ripple is definitely not early for hints that this is a real use case to be showing up.
We will have to revisit this combo on another show. I love this debate chat. Sims has a time constraint, folks, so we're going to go straight to those Rafflebot spins. The code was Friday. If you're in, we're going to do the draws right now.
I think we're going to do a different game as well, right? We're just going to do Plinko to make it quick for Sims.
Love it. I love Plinko.
Yeah.
Lieb Bull. Come on up here. We don't have the music, but you won. LEEBBLE. So go ahead and request. Get to requesting now. We're going to have a quick timer running today. So we're going to go ahead and do our second draw. Who do we got? And Marky Meta. Marky Meta. Rocking the 3D punk. Smiling.
Let's go, Mark.
Marky Meta, come on up here. You won. All right.
Friend of the
who do we
show.
have? I'm not seeing requests yet here.
Man,
Folks.
Bitcoin's still going, isn't it? 95.2.
Nice.
Grinding higher.
Rally would improve sentiment around here. Marky, I see you. Listen, you got a request. I see the hearts. Come on up here. Request. Liebel, I'm not seeing. All right, okay. We got them both. All right, Liebel is going to go first. Then Marky, Sims. How do we want to do this? Do we want to do Plinko?
Yeah, we'll do Plinko.
All right. Well, let's get it up on the screen if we can here. Liebel, you're up first. GM, how you feeling? You won. Can you hear us? Well,
It's
perhaps
less.
they are.
It ain't the same without the music, man. Without the music, I feel like everyone's just confused.
Go, can you hear me?
Give us some music, Sam.
Yeah, GM.
Who is man?
All right. Well, Sims, I know we're tight for time. So how are we going to do this? We're going to give them. Let's just sustain ourselves.
5.
Yeah, we're going to do 5 $100 balls for each person. They've already secured 500, so whatever lands on top of that.
Yeah.
All right, guys. So
GG.
you both have won $500, and you're both going to get 5 $100 Plinko balls. All right.
Let's see how this
Label.
goes.
Let's go.
Let's go.
All right. Oh, let's go. Go right. Go right. Go right.
Oh!
Wow.
That's
Holy
a huge win.
Wow. What, 20?
So that'll be 20.
3,500. Somebody's won.
$35.
Nice.
Label.
Holy shit.
Nice.
Let's go.
Holy
Wow.
shit.
That's our biggest
Huge.
cheat giveaway to date.
Okay.
Let me
Huge
just
one.
That's
screenshot
huge.
that so I can keep the numbers. Holy shit. Congrats. That is massive.
So Plinko's the game, folks. Plinko. I mean, I love the other games, but man, Plinko.
Okay.
Congrats. Huge.
All right, Marky
Holy
Meta,
shit.
you're up next. It's gonna be hard to beat that, my friend. GM, how you feeling?
GM, gentlemen, GM.
All right,
How's everyone doing?
we're doing well. We hope we want to see you win even bigger if we can. All right, 5 $100 balls. Sims, whenever you're ready. Here we go. Oh, they're
Let's
starting.
go. Let's go.
They want to go right. Go right. Go left. Oh, that's some decent ones.
Go, go, go.
All right. All right. What do we
So
end
what
up
was
with?
that? I think it was lower. I think he won that much in the end there.
right.
3,500 was the first one. We'll have to look at the numbers, but I think that guy's going to get like 600.
Yeah. Well, Mark, you still ended up winning. I think it was like a $670 win or something, or close.
Yeah, including the 500, it's like 600, I think, because the other guy got 3,500. Nice.
So, nice wins for you both. We will
Thank you,
follow up with you
gentlemen.
after the show. Thank you for tuning in as always. All right, folks, a little bit of a tighter show. Some really good conversation here. Sam, Jeebs, thank you both for joining us, man. Of course, as always, that is it. That's going to be our show. Thanks to our listeners. Thanks to our partner. As always, we'll be back on Monday at 10 a.m. Eastern. Till then, go make it a great day. Goodbye.